Hey there, TRASTRA fans. In this week's crypto roller coaster, Bitcoin took an 11.68% nosedive, all thanks to a Wall Street Journal report suggesting Elon Musk's SpaceX might have had a change of heart about its Bitcoin holdings, which isn't true, by the way. All you have to do is Google the difference between selling an asset, which is a documented change of ownership, and devaluing it, for the sake of tidiness of bookkeeping, which is a mandatory accounting operation for any public company. Clearly, the crypto public didn't do its homework. As a result, the crypto world was left reeling as billions in hedged positions were liquidated, with a whopping 176,752 traders feeling the pinch in just hours. Meanwhile, Binance continues to face its demons. After launching Binance Connect with much fanfare a year ago, it's now pulling the plug, perhaps due to a few regulatory hiccups and a breakup with its payment processor, checkout.com. We'll talk about that. MasterCard is partnering with Ripple and Consensus for a central bank digital currency program. There's also some hilarious news from the NFTverse trademark. Buyers of the Bored Ape NFTs are suing Sotheby's, realizing that maybe, just maybe, digital apes weren't the golden ticket they hoped for. And to top it all off, OpenSea, the NFT marketplace giant, is shaking things up, making resale fees optional from 2024. A tough break for all the digital artists out there who dreamed of getting rich off of an iPad doodle. Anyway, grab your popcorn, folks, because in episode 76 of the TRASTRA Newsreel, we're serving up some premium entertainment. Obviously, the news of the week is Bitcoin's 11.68% drop on fears that Elon Musk's SpaceX had written down some of the value of its cryptocurrency holdings. It all began on Thursday when the Wall Street Journal reported that SpaceX had devalued its Bitcoin holdings by $373 million in the past 2 years. As a result, the Bitcoin and ETH price slid on August 18th to a 2-month low, triggering a series of liquidations for thousands of derivative traders. The crypto bloodbath led to billions of dollars worth of hedged positions being liquidated, and several traders lost millions of dollars in a single trade. According to CoinGlass data, a total of 176,752 traders got liquidated within hours, indicating a rapid rise in price volatility just days after Bitcoin and ETH recorded their lowest daily volatility in several years. Binance has announced its decision to discontinue Binance Connect. Binance Connect made its debut on March 7th, 2022, originally introduced as Bifinity, a platform created to bridge the gap between traditional monetary systems and cryptocurrency firms, enabling fiat crypto exchanges with support for 50 digital cryptocurrency and Visa MasterCard payout support. However, UK's Financial Conduct Authority, the infamous FCA, voiced concerns regarding Bifinity's involvement in a $36 million convertible loan agreement with Equinox, a NASDAQ-listed crypto investment firm. That was back then. In the same month, Binance's Australian segment suspended its standard currency services. By June, the company faced a setback with German authorities who declined their application for a crypto custody permit. Currently, Binance finds itself entangled in legal proceedings with the U.S. regulatory bodies over accusations of conducting unlicensed operations in the U.S. So things are not looking too bright for Binance, is what I'm saying. When it rains, it pours. I mean, payments processor checkout.com is no longer servicing Binance. Checkout.com is no longer servicing Binance. It cites, reports of regulators' actions and orders in relevant jurisdictions, and inquiries from partners, as well as additional concerns over Binance's anti-money laundering sanctions and compliance controls. Checkout.com first partnered with Binance in March 2022 to help it launch Bifinity. We already talked about that. And we now know that Binance shut down the Binance Connect platform on August 16th, the same day its partnership with Checkout.com ended. So it's kind of a mess there, but the bottom line is both Binance Connect and Checkout.com are no longer a part of a Binance global infrastructure. On the other hand, global payments giant MasterCard is forming a central bank digital currency program with initial partners including Ripple and blockchain development firm Consensus. MasterCard announced Thursday that it's convening a group of blockchain and payment service providers to participate in the program. While MasterCard did not detail its plan for the new program, the payment giant noted that CBDCs shouldn't be adopted in a vacuum, and the work of its CBDC partner program will, quote, help central banks understand how to develop a CBDC that adds something new and valuable to the economy, end quote. A reminder, as early as September 2020, MasterCard launched a testing program for central banks to evaluate CBDC systems. In February 2021, the company started to issue prepaid cards in the Bahamas, allowing users to convert the cent dollar, the so-called cent dollar, which was the country's CBDC at the time. I'm not sure whether that program is still active. I'm going to have to look that up, so let me know if you're interested. A public filing released by the U.S. Federal Bureau, well, the infamous FBI, shows that the law enforcement agency seized around $1.7 million worth of digital assets from March to May. In particular, the FBI seized $147,000 in Bitcoin, $800,000 in ETH, $307,000 in Tether, $469,000 in DAI, and $20,000 in Monero. Assets were confiscated from a wide range of sources, including Binance exchange wallets. According to the FBI, the seizures of the assets were a result of various breaches in federal regulations. It's kind of funny, 20 grand in Monero, Jesus. Here's something totally weird in my view. Former Singapore parliamentarian, or nominee for that matter, he's never actually been elected a parliament member, according to his wiki page, by the name of Calvin Chang, has launched 2 stable coins in Switzerland to help investors diversify away from the US dollar. Anchored Coin, his company is called Anchored Coin. It's fully owned by Chang, who is Serbia's first honorary consul to Singapore. I have no idea, is he a Serbian citizen? How does Serbia fit into this picture anyway? It's very strange. Anyway, Anchored Coin has launched a euro-backed stablecoin, euro, I guess. AEUR, and a Swiss franc-backed stablecoin, ACHF, according to a statement. Both stablecoins, which will be issued on the Ethereum and BNB chain public blockchains, are backed one-to-one by their respective fiat currencies and held in Swiss banks. I'm going to take that in air quotes, held in Swiss banks. No word on any audit or anything, but earlier this year, Anchored Coin was granted membership in the Financial Service Standards Association, which means it has to comply. It's a Swiss regulator, which means that it has to comply with Swiss anti-money laundering rules. In addition, the firm said it will also comply with MiCA once that comes into effect in 2024. Still, I smell a huge scam, so just beware, and let me know if you want me to follow the situation. I think it's going to be pretty loud a couple months from now. Speaking of Singapore, the country's monetary authority has revealed the main feature of a regulatory framework that aims to ensure value stability for single currency stablecoins, something the Fed did 2 weeks ago in the US. I talked about that, and I'm going to release a short explainer on TikTok. I think this news is huge, and somehow it sort of avoided public eye for now. But anyway, the regulatory requirements that stablecoin issuers in Singapore are expected to meet include value stability. The composition, valuation, custody, and audit of the stablecoin reserve assets must adhere to specific criteria, providing a high level of assurance regarding value stability. So then it goes capital. Issuers are mandated to maintain minimum base capital and liquid assets. This requirement aims to mitigate insolvency risks and facilitate an organized business wind down if needed. Another one is redemption at par. Within a span of 5 business days following a redemption request, issuers are obligated to return the par value of the stablecoin to holders. I think this one is an absolute, it's unimaginable. I don't think it's doable. But anyway, yeah. Of course, disclosure. That's another important point. Issuers must furnish appropriate disclosures to users, including details about the value stabilizing mechanism, the rights of the stablecoin holders, and the audit outcomes of reserve assets. So we'll see. I mean, Singapore is pretty high up on the evolutionary ladder right now when it comes to cryptocurrency issuance. We'll see what happens. El Salvador, which adopted Bitcoin as a legal tender in 2021, has seen its dollar bond outperform the majority of the emerging markets with a 70% return in 2023. The massive rally of the bond has now drawn interest from several institutional giants, including JP Morgan, Eaton Vance, and PGIM Fixed Income, prompting President Nayib Bukele to say, "I told you so" on Twitter. Apart from the institutional giants, the likes of Lord Abbett, Neuberger Berman Group, and UBS Group, who have also added that debt security since April. El Salvador paid $800 million in debt in full within the due maturing time at the start of this year, raising confidence in the country's bonds again. We'll see what happens next year. The price of Ethereum saw a significant 10% surge, rising to 1,700 roughly, in response to news that the U.S. Securities and Exchange Commission plans to allow the creation of exchange-traded funds based on Ether futures. We'll see if that happens. Nearly 12 organizations, including ProShares, Volatility Shares, Bitwise, and Roundhill, have recently submitted applications to offer ETH futures ETFs. The SEC may approve the applications as early as October, according to officials. The SEC's decision to allow Ether futures ETFs wasn't unexpected and shows how the regulators' views on various financial products have evolved over time. Coinbase will suspend trading for 3 widely used stablecoins in Canada. Following its recent expansion into the Canadian market, evaluations of the impacted stablecoins USDT, RAI, and DAI show that they do not meet Coinbase's listing requirements. Customers can still deposit money into and withdraw from their RAI, DAI, or USDT wallets during this trading stoppage, which is scheduled to start on August 31st at around 12 p.m. Eastern Time. Siemens plans to invest 500 million euros in a new technology campus in Erlangen, that's a German city. The campus will be the center for technology activities related to the industrial metaverse. The investments are part of Siemens' global investment strategy. A total of 2 billion euros will be invested in Europe, the United States, China, and Southeast Asia. Before construction begins, the buildings are planned and simulated digitally. This creates an accurate digital image in which the entire factory layout is optimized and later adopted to the real world in the industrial metaverse. This is so funny to say, real world in the industrial metaverse. It's basically just a tech park with a bunch of people with VR sets modeling things. This is what's called industrial metaverse. Buyers of the Bored Ape NFTs are suing the Sotheby's auction house after realizing that digital apes might not be the golden investment they once thought it was. Investors claim that Sotheby's gave the NFTs an air of legitimacy, only for the value to plummet from over $241,000 a piece to a mere $50,000, imaginary dollars. The plot thickens as it's revealed that the buyer at the auction was the now disgraced FTX. Quote, the Sotheby's representations that the undisclosed buyer was a traditional collector had misleadingly created the impression that the market for Bored Apes had crossed over to a mainstream audience, the lawsuit claims. And here's my favorite part. Lawsuit plaintiffs say that harmed investors bought the NFTs with a reasonable expectation of profit from owning them. Reasonable expectation. It's almost as if speculative investments in digital monkey pictures might be risky. And finally, leaving you on the hilarious reasonable expectations note, one of the big promises of NFTs was that the artists who originally made them could get a cut every time their piece was resold. Well, no more. OpenSea, the biggest NFT marketplace, said on August 17th that it plans to stop the mandatory collection of resale fees for artists, while still fully endorsing royalty fees for the initial sale. Starting March 2024, resale fees will essentially be tips, an optional percentage of a sale price that resellers can choose to give the original artist. It'll be their choice if the reseller doesn't want to hand over any money to the artist. Unsurprisingly, Yuga Labs, the company behind Bored Ape Yacht Club and CryptoPunks, said on the 19th, so that's 2 days later, that it would block the ability to trade its newer NFTs on OpenSea by February 2024. I honestly have no idea why it has to take 6 months to just push a button. But I guess they're going to try to make a deal of some sort within that time period. But given that NFTs, create value by constantly changing hands, and the more hands they change, the greater value they enjoy, needless to say, OpenSea's decision is a huge blow to Yuga Labs' business model. Anyway, the feud is on, so stock up on popcorn, and I will see you in the next video. Peace.